Welcome students to our Banking is So Fetch presentation. It is crucial to consider where to store your money to organize your finances effectively. With this in mind, let's go ahead and get started. Here is the agenda for our presentation for today. So today we will cover three main phases. So the first phase will focus on the importance of choosing the right bank and exploring your available banking options. In the second phase, we will discuss the different types of accounts you should consider before opening an account with any of the banking institutions that we introduce. And lastly, in the third phase, we will cover the steps for opening an account, the post-account opening steps, and provide resources to help guide you in this decision. Before you start looking at different banking options, it is important to ask yourself some key questions about each bank you're considering. The first question to consider is whether the bank is FDIC approved. This is crucial because it means that if something were to happen to your bank and your deposits were affected, your money would be insured and protected for up to $250,000. Another important consideration is the types of fees that the bank may have. For example, there are overdraft fees, and these are the types of fees that you are charged when you withdraw more money than you have in your account. ATM fees are fees for using out-of-network ATMs. And then lastly, an account balance fees are if you fall below a certain amount in your account, you might be charged a fee for that. So being aware of these fees can help you avoid unnecessary charges by taking any necessary precautions. And remember that having these fees doesn't necessarily mean it's a bad bank. Just being informed about the terms and conditions is important so you can avoid those unnecessary fees or those unnecessary charges if you don't want to pay them. All right. So lastly, you might also want to find out if there are any ATMs and banking branch services near your home or school. So this way you know this information and it'll help you understand how accessible or inaccessible banking institution services are. So you want to consider your options. So now that we have gone over some important questions before choosing a bank, let us now discuss some of your options. So there are three types of banking institutions, each with its own unique features and services. The first is traditional banks, such as Wells Fargo, Bank of America, and JP Morgan Chase. These banks focus on providing a personal customer service experience while offering accessible ATMs and branches across the country. And then they also ensure easy access to funds. The second type is credit unions, which are accessed through professional connections or career-based affiliations. So credit unions provide a range of financial tools, including checking and savings accounts, personal loans, and credit cards. The specific banking institution may require you to meet a certain amount of work, residential, or occupational requirements. And then lastly, they are insured by the National Credit Union Administration and often offer brick and mortar branch locations. As nonprofit organizations, credit unions prioritize relationships and typically offer higher interest rates on savings accounts. Some examples of credit unions include Schools First, Altura, and Westcom. The third type is online banks, which operate exclusively through online platforms. Because they have no physical location, online banks often offer higher interest rates and lower fees, and they also oftentimes have no minimum balance requirements. So some examples of those online banks include SoFi, Ally, Discover, and Capital One. Overall, traditional banks and credit unions offer similar services and financial products, but the main difference among the two is that traditional banks are for profit enterprises, whereas credit unions are for nonprofits. Now that we have explored different banking institutions, it is important to understand different types of accounts so we can make a better choice about which institution to use if we have preferences for holding different accounts. So the first type of account we will discuss is the checking account. So these accounts are typical bank accounts that you can use for your everyday expenses, such as paying for bills or making purchases. here are some things you may want to look for in a checking account. So you may want to check if any student accounts are available. Oftentimes, depending on the institution, students can waive out of certain account fees. So it's usually if they fall between the ages of 18 to 24. And then be aware that sometimes in opening an account, you might be asked to make a minimum deposit, which can vary from institution to institution. And then also, some checking accounts will require you to maintain a minimum balance in the account at all times. So now that we've kind of gone over that, here is a picture of what a routing number versus an account number is. So a routing number serves to identify the institution in which your account is based, while the account number identifies the account within the institution. And then usually the way you might need this information for depositing or direct deposit, or if you need to give someone your information so they can deposit some money to you. Usually if you ask for a check from your bank, you can find these numbers on the bottom. Or if you have like the mobile app, sometimes if you go into the mobile, like your account information, you're able to find that information directly on those apps. Okay, so moving on, the second type of account is a savings account. And there are two different types of accounts. The first type is known as a traditional savings account, which keeps things very simple. They don't offer other incentives to encourage consumers to select these accounts over another. Rather, they simply offer a secure place to store your money, so kind of piggy bank style. And then usually traditional brick and mortar savings accounts will usually offer an APY closer to the national average, which is around 0.40%, which is not a lot. And then the second type of savings account is a high yield savings account. Usually these types of accounts have higher interest rates, so it serves as an incentive for consumers to open an account. The higher the percentage, the more money you earn. So most high yield savings accounts operate anywhere from 3 to 5%, which is much higher than that of traditional savings accounts. They can grant you with an average yearly return of anywhere from $50 to $200, depending on the amount you deposited and then the duration of the time that it's been in the account. So here, again, we're kind of comparing the two accounts. Here we have seen that the traditional savings will be at 40%, which is a lot lower than the high yield savings, which operates between 3 to 5 APY. Okay, so moving forward, we have that the fact that there's also intermediate savings accounts. So these include both money market accounts and certificates of deposit. MMAs and CDs are types of federally insured savings accounts that can earn interest, but their rates and ease of access differ. Both of these accounts tend to be case specific. So for example, MMAs have higher interest rates compared to other accounts, but they may limit the number of transactions and often require a minimum deposit. Similarly, CDs offer a higher interest rate, but you're unable to access the money until a specific period of time has elapsed. So accessing the money early can kind of result in some penalty fees. So these are just some form of like intermediate savings accounts, which are a little bit different than the ones we presented before. So moving on, now that we have covered various banking institutions and account types, you should now understand the requirements and the process for opening an account. So what do you need to bring to open an account? So you can open an account online or in person, depending on the financial institution that you select. To open an account, you may be required to bring some certain documentation. And the specific requirements can vary depending on the institution. So it's important you check what you will need in advance. Typically, you will need to bring a government issued ID, your social security number, personal information, and an initial deposit, also a proof of residency, and any other requested documents. For instance, if you're a current student, you may need to provide proof of your student status. So these are just some of the traditional things that you may need. Just remember that some of it can vary depending on the institution. So now that you have an account, it is important to set yourself up for success. So now, what are the necessary steps that you might take after opening that account? So here are some tips to set yourself up for success once you've created your accounts of choice. So you might want to sign up for direct deposit. This way you can have access to your funds faster wherever you are. And you may want to sign up on our web to ensure to get your financial aid refunds if you're eligible for any directly to your bank account if you receive any. Also, if you have an on-campus job, you may want to sign up for direct deposit on UC Path to ensure you have access to your paycheck funds. If you have an off-campus employer, you may want to ask your employer if they have direct deposit and then sign up so you can access the funds more easily. And then second, you want to make sure that you are visiting your bank statements regularly so that if anything looks different or suspicious, you can catch it on early and take care of it. And then focus on building your savings so you can achieve any financial goals that you may have. And then lastly, now that you have all this information, we encourage you to do your own research as well so you can make better and more informed decisions. So check out NerdWallet for more information on the types of accounts and try utilizing their card comparison tools to help you decide which accounts will work best for you. They also have a podcast called Smart Money with an episode on your guide to choosing banks, which can complement the information that you just received in this presentation. So that is all that we have for you today. Thank you for taking the time to attend this presentation. On this slide, we have provided many ways in which you can kind of visit any of the resources. And thank you once again for attending. We wish you all the success in your undergraduate career. Thank you.